In today's video, we're going to run down the burning question I get all the time. Why would institutions use the mainnet and the XRPL if Ripple's giving them their own private ledgers? Why wouldn't they just use those? Well, that's what we're going to break down so that you understand that these are necessary for XRP to actually see the adoption that we want. So Ripple's revolutionizing blockchain for institutions by using these private ledgers on the XRPL. And they allow the connection to the public mainnet, but the XRPL is a decentralized blockchain known for its speed and its cost, and that's what makes it ideal for these cross-border payments and tokenization of real-world assets like properties and bonds and CBDCs. So banks and central banks, they need their privacy, right? Like they're not going to want just these transactions, all of their stuff that they're doing to be aired out into the open on a transparent blockchain. So they need private permissioned ecosystems, and that's what these sidechains or private ledgers that Ripple provides, that's where they come in. Let's talk about what these private ledgers are and why institutions have to have them. Ripple's developed these private ledgers based on the XRPL's technology to allow banks, central banks, and other institutions to test the blockchain first. Make sure it's secure and it's in controlled environments. And people are like, yeah, they've seen this other asset that's these high prices. Well, it might be, but it's not XRP. It could be a replica. It could be a settlement mechanism within those ecosystems. Well, if they have that, then why do they need XRP? Well, they're going to have to settle between their siloed ecosystem and the other ones. And so that's why these sidechains can be independent blockchains and be exact replicas of the XRPL that would run in parallel to the mainnet, and they would be able to connect to it and let the wall come down when they need that to happen. So one of the prominent examples is CBDCs. Bank of Japan, Brazil, Argentina, Palau. There's lots of places that are central banks that are going to issue a CBDC. I don't think we're going to get it here in the US. Trump's already stated we're not going to have a CBDC issued by the Fed. Maybe we'll get something issued by the Treasury at a later date. And a lot of people are scared of central bank digital currencies because of the programmability and their ability to like turn your credit on and off. I think you're going to get the programmability based on whatever the government and the culture is there in that jurisdiction and the laws and regulations around it. That's what's going to govern the smart contracts around the CBDCs. I don't think you're going to have to worry about that the way that people are scared about it here in the US. Now, I could be wrong. If you give them an inch, they'll take a mile type deal. So again, I don't think we're going to get that here in the US, but you definitely are going to have private stable coins that are issued by institutions and enterprises and a bunch of other people. So, but they're going to need their own private ledger. And so that's why Ripple has created these and allowed for interoperability between the mainnet. They pushed XLS 38 live, which was the sidechains. So again, these are designed for central banks to issue and manage central bank digital currencies. This is a private ledger using the same technology, offering fast transactions, settling in 2 to 4 seconds, and super low fees, which allows central banks to maintain full control over their own digital currencies. And Ripple has engaged with central banks all over the world to pilot this solution, ensuring it meets their needs in privacy and regulatory compliance before they launch it and connect it to the mainnet, which is again going to require enough liquidity and XRP to be able to settle that. But I digress. We'll keep it on the topic here. So beyond CBDCs, these private ledgers are used by banks for other purposes, like tokenization of real-world assets. For instance, a bank could tokenize commercial property or a bond on a private ledger, keeping those transactions confidential while they test the efficiency of the XRPL's blockchain. And they've been doing this for a decade. Like that's the other piece that I think a lot of people miss here is they have been trialing this stuff for 10 years. And maybe there are solutions out there that are faster, cheaper, more secure, whatever the benefit is. But I'm telling you, banks need to trial stuff and integrate it, and they're going to move slow. They're like a glacier, and they have to be able to test things for an extended period of time before they're going to adopt it. And so this kind of goes back to Ripple's CEO, Brad Garlinghouse, has described these private ledgers as temporary blockchains between banks, emphasizing their cryptographic security and their ability to manage liquidity without the public exposure. Because again, they want the privacy. And they're going to take a long time to trial these before they adopt them at scale. And so I know people have been frustrated and hanging out for a long time. I think it's going to be worth it. These private ledgers are critical because, again, it allows institutions that can't operate on a fully public blockchain, like the mainnet on the XRPL, to be able to trial it and then get used to it and integrate it. And they can use these sidechains as they experiment and comply with regulations and build confidence in the blockchain technology before they scale up. So now let's talk about these private ledgers and how they connect to the mainnet. The XRPL supports a feature called Sidechains, introduced through XLS 38D, which is an amendment that's already been passed. and is live on the network today. Sidechains are independent ledgers with their own consensus mechanism, transaction types, and rules, but they're designed to be interoperable with the mainnet. Many people know the EVM sidechain, the Hook sidechain, but all these private ledgers are sidechains also. And this interoperability makes it possible through cross-chain bridges. These bridges allow for assets like XRP or tokenized tokens to move between the mainnet of the XRPL and the sidechain. So here's how it works. When an asset needs to be transferred from the private ledger to the mainnet, it's locked on a source chain and then minted on the destination chain. So basically, they escrow it here and then they represent that value somewhere else where it can be used. This process is managed by Door accounts and verified by witness servers, ensuring security and accuracy. So basically, you can't defraud it, right? Like you can't lock this asset up and just keep using it over here. If you lock it up here and you issue it there, it needs collateral. Like it can't be moved here. It's only able to be moved on the other chain. So an example of this, imagine a central bank using a private ledger to issue a CBDC. If they need to settle a cross-border payment with another institution on the mainnet of the XRPL, they can use a cross-chain bridge to transfer that value. XRP would then act as a neutral bridge currency in these transactions, facilitating the frictionless movement between different currencies or ledgers. Ripple has emphasized that interoperability is their priority with all this, not segmentation, not walled gardens, but the interoperability of all these siloed ecosystems through the internet of value, with plans for this network to be able to allow the CBDCs and the ledgers to be fully settled and interoperable through XRP while preserving each institution's independence and maybe even each government or enterprise as well. So let's talk about XRP, everybody's favorite topic here, and why it's going to be worth a lot of money, because it's going to have to move a lot of value. So this brings us to a critical role, and it's liquidity. I know a lot of people talk about market cap for XRP and think it's asinine to think it's going to be quadrillions or pentillions or whatever the crazy market cap ends up being. But this is a protocol that moves value, and liquidity of the asset is the whole purpose to be able to settle this stuff. So for the cross-chain bridges to work efficiently, there has to be sufficient liquidity in XRP across both the private ledgers and the mainnet. Liquidity refers to the ability for XRP to facilitate transactions without causing significant price swings or delays. So that means it has to be a high value. XRP is the native asset for the XRPL, and it's used for all these transactions and the fees on the network, which bridge the currencies for the settlement. When liquidity is high, institutions can settle large transactions quickly and cost effectively. Again, it needs to be a high price for XRP for institutions and banks on the private ledger that have tokenized, let's say 10 million in assets, could then settle a trade with a partner on the mainnet using XRP, provided there's enough liquidity to transfer that smoothly. As more institutions adopt the private ledgers and connect to the mainnet, the demand for XRP is likely to grow, which is what we're hoping for. This is increased activity could enhance XRP's utility as it's used not only for fees, but also as that bridge for cross-chain ledger settlements. And over time, obviously, like I've been talking about, XRP's value is going to skyrocket, reflecting its real-world asset use for these institutions, the tokenization of those, the CBDCs, and all of the other things that are going to be issued on this network that are going to need to be settled from these private siloed sidechains over the mainnet when all this actually does kick off. And again, there's got to be enough liquidity in XRP. So it's not going to happen until there's a supply shock. We've looked at the Shane Ellis theory. We looked at these ETFs and the demand that's going to cause. We've looked at the reverse carry trade. There's just a lot of dominoes that we've talked about in the past that could really drive the value of XRP's price up. And then all these transactions and these tokenized assets could move over the network and settle through XRP, holding the price at a high value. So why institutions need these private ledgers interoperability? Well, first, they provide a safe space to test the blockchain without the public exposure, like we said before, meeting strict regulatory requirements. And second, the ability to connect to the mainnet of the XRPL via cross-chain bridges allows for institutions to scale their operations and engage with global markets when they're ready. I think David Schwartz said they'll press the red button and the wall comes down, right? And so I know that's what we're all waiting for, but I think we got a few more amendments that have to be passed. I think that we need a stablecoin bill and the futures market, and then once these ETFs are live, XRP is going to be a game changer. It's set up perfectly positioned with all of these private ledgers already in place, either from Corda and R3 or Ripple, to become widely used and interoperable with the mainnet. XRP's role as the bridge asset will become increasingly vital. And again, I think it'll end up being a tier 1 asset because it'll be a high sustained price with super high liquidity that's backed basically by the world's transactions. So to wrap it up, Ripple's private ledgers, built on the XRPL technology, empower institutions to embrace blockchain securely and compliantly. The sidechains and the CrossChain Bridges can connect to the ledgers seamlessly, making XRP the go-to asset for all of this. The value's in the protocol, but that's what's going to drive the value of the asset. And as XRP's liquidity grows, so does its potential to drive institutional adoption and reflect its real value in the global economy. So let me know below. Does this make sense to you guys? I know there's been a lot of back and forth and a lot of FUD on the internet about this. I had a hard time with it for a while, to be honest with you. And because I asked the same questions as everybody else, I'm like, well, if they have this private network, why do they need the main net? But if you're interacting with somebody you don't really trust, you want to be able to verify their transactions, and you need a bridge that's immutable and you can send value over without having to worry about that counterparty risk. And it removes the need for the Nostro Vostro accounts. I know a lot of people say stablecoins are going to remove the need for XRP. You're just exacerbating the Nostro Vostro accounts. If you have to hold JP Morgan's coin and Google's coin and Apple's coin and everybody else's coin to be able to settle into your infrastructure and then swap for your coin, you need a DEX, a decentralized bridge asset that allows for interoperability between all the stablecoins, even if they are denominated in the same currency. So hopefully this is valuable for you. If it is, we are just now over 50,000 subscribers here on the YouTube channel. If you could do me a favor and just subscribe, like the video, it really does help the algorithm. And we'll see you guys on the next one.